The rule that we are going to show is a rebalancing rule that takes advantage of low volatility on Bitcoin, that translates quite often. We saw it in the months before April. We saw that in May, and we are seeing that also in this period, in a higher volatility in the altcoin market. That means that probably this is a situation that happens to you quite often. You are opening your wallet, you are opening your blockfolio, you are checking the prices and the values of your position, and one day you are very happy because your coins are going up. You would like to take profit, but then you go inside of the chart, you see that the pattern is good, and nobody likes, honestly, to sell while the market is trending higher. And so what you do, you don't sell. The day after, what happens? That the market goes down and you regret the fact that you didn't sell the day before. So looking at this quite, I think, common pattern among traders, I was thinking about a rule that automatically take advantage of this volatility, selling the coin that is performing better in your portfolio, and buying instead the coin that is performing that day. This starts from the assumption that you already made a good due diligence about the coin that you added in your portfolio. That means that even if you are going to buy some asset that is going down, still this other asset that you're going to buy is an asset that you are willing to have in your portfolio. And that comes the funny part, because honestly, I kept the rule running for too much time as I should have. So the market became more trendy, started to trend upwards. Oleg was more prompt to change the setting of his rule, and while we found ourselves talking about the strategy, we found that my strategy was actually losing money, and this strategy instead was making money. Why? Oleg, would you like to tell us why?
Yes, I'll tell you in a second, but do you want to switch? Yes, let's go into Coinrule and let's actually build that strategy quickly here. Basically, the way I run the rebalancing strategy is that I rebalance every day. Every day I sell 25% of my worst performing coin and buy 25% of my best performing coin. Let's do it in percent, Ruben. So it's 25% of my worst performing coin, yes, to my Bitcoin wallet, and buy 25% of my best performing coin with my Bitcoin wallet. Now, I'm sure one question, and this rule has made me, I've been running it for the last something like 3-4 months, and it's made me about 35-36% return since, which it's obviously it's not 10x, but it's something I feel pretty good about. I feel it's a good risk minimizing rule as well. This is the kind of trading strategy I like to have one part of my portfolio running on. Now, Ruben, one question obviously for you that I have, and I'm sure many others would have, is what's a good sign to know that it's time to change it around? What are the warning signs?
Well, the warning signs we had here, because if you remember when we were talking about that rule, we were basically in this period here. So when I was thinking about the rule, we were in a deep lateral market. So there was absolutely almost no volatility, no significant volatility. But what was the warning sign to switch the parameters of the rule was the breaking of the upper bound of the accumulation area. That, especially with an astonishing volume, it was unprecedented in the previous at least 4 months. was a very strong sign that something was changing in the market. And actually, that was true, because since then the market kept trending upward. So it's very important to run automatic trading strategies, but it's always nice and useful to keep an eye on the market, because as we were saying, the perfect trading strategy doesn't exist, and you should always adapt the active rules to the market conditions. So that's also why we are defining in a very specific way different kind of strategies, and we are trying to show you when these rules and strategies performs better, and in which other periods instead it's better to use other strategies.